We need your support. Click the like buttons below. Now onto the video. Welcome to readtheticker.com. We're going to do something different today. We're going to look at gold stocks with Elliot wave, with a monthly chart. Now, applying a pattern structure onto a chart is not a science, it's artistic. And whoever holding the brush can do whatever they want on the canvas. So for me to get any chance of getting accurate with Elliot wave, it has to be very, very obvious. So this is the structure. Be familiar with wave 1, which is off from a zero point. A 0 point is at the end of a wave C or at the end of a wave 5. Okay? A downward wave 5. Here's a downward wave 5 here. So what we want to see for a good bullish structure, a strong wave 1, the correction down to wave 2, and the correction wave down to 2 may be an ABC, or under the alternative rule of Elliot wave, it might be a complex, multiple ABC. Ideally, every correction deals with time and price. If it's just time, it just goes sideways. If it's just price, it normally just goes down rather quickly. So obviously, you want to, it could be a mixture of both. Like Richard Wyckoff informs us, if this is going to be a sign of strength, this is going to be an LPS. Okay? Sign of strength, LPS. We're going to see well-defined waves by the composite man, and we're going to reflect that in Elliot wave. And we'll look at the gold stocks. Okay. First candidate is HMY. Now, the question is this really up here a wave 1 or a 4? It's good strong volume. It's a change of character. And as you notice on the swing back down, the volume is less. So the big demand here and supply tapers off. And we have some demand on the upswing. So there's definitely two waves of accumulation by the composite man. As you can see, volume swing tapers off. I believe HMY is in a very bullish position. Now going back in the stock, I think that's a 5 over here. Now what happens after that can be debatable. This could be a 1, 2, 3, 4, and this is a fifth wave failure. A fifth wave failure is when the 5 fails to take out the 3, because it's very, very weak on the bearish side. If it's weak on the bearish side, it's bullish. It's strong on the bullish side. Okay, because it can't take out a new low. Okay, but if it's an ABC, this is a wave 1, wave 2, and that's our progress up here. The reason why it could be a 1, 2, 3, 4, 5 is because this 4 does not penetrate that 1. Okay? So in either case, whether it's a C or a 3, you know, wave C or a wave 3, it's still bullish. Okay? Because this point here is a higher low. Okay? And the volume pattern is very strong for HMY. Good volume on the up, poor volume on the way down, good volume on the way up, poor volume on the way down. This is bullish. So I would go with a structure that you might get a breakout of a wave 1, wave 2 to wave 3. So if we're looking at Richard Wyckoff logic, we've had a sign of strength and a rather large exaggerated sorry, so let's rephrase that. We'll call that a minor sign of strength because it hasn't been able to break that pivot there. We've had a long consolidation. We're still probably in phase B. We're expecting a sign of strength up to the 4. Okay, so minus sign of strength to $4, come back to 2, and another sign of strength up to 4. And if it breaks, it'll be a serious sign of strength. Okay, so I don't see anything wrong with this chart. I think it's bullish as ever. Great volume pattern, good volume on the upswings, poor volume on the downswings. The Elliot wave shows exhaustion. This is exhaustion here, right? All that low volume, nothing was happening. It's exhaustion. And we had a change of character there. So this has got to be a candidate. HMY. Now we're looking at HL. This stock is a little different. It has a few more troubles with it. I believe it's had trouble with silver mines and what have you, gold mines, what have you. So it's a little bit more confusing. But still, like as part of the sector, we have big strong volume on this upswing here. And we've got low volume on the downswing, even though it's been quite, you know, a serious, deep downswing. But so far, this pattern, this price here, has not taken out this low here. So we still are dealing with a higher low, even though we've got probably have 4 or 5 wave structures down. So what is it? Definitely a 5 up here. A, B, C. Yeah, so I think that this here is a start point, is justified. Okay? So that's a C. We're getting either another A, B, C up, or we're getting a W1 or W2. Now this is the tricky point. A W1 and W2 requires, this is an impulse wave 1 and a correction wave 2 requires that this point here does not break this low here. For this to be a 5 waves count. Now, if over time this wave goes down and breaks that point, this becomes an A, B, C candidate. Okay, so at the moment it's a W1, W2 candidate, but if that point goes down low and breaks that point there, it becomes an ABC candidate. Confused? Yeah. Bit of learning required. Now this structure down here, I've named it an ABC. Here's your B. This is a small b, small b, sorry, small a, small b, small c. It could be a 1, 2, 3, 4, 5. Yeah, because this 4 is not taking out that point there. But the thing about Elliot wave, the pattern has to meet the story, in my opinion. You just can't mathematically draw a pattern. You've got to believe in the story. So I believe that's an ABC down. So at the moment, it's bullish. It's a little bit harsher than HMI because time and prices hurt the trend. But look at this powerful up by all that volume. And the volume pattern is still great. So it's got to be a candidate, a bullish candidate. Now, at the moment, this is an Australian stock, metal stock, Newcrest Mining, NCW. Readtheticker.members, it's NCWAU. Big charts, it's AU:NCM. And what we notice, this is the decade chart, what we notice is that this low point here is above that point there, which makes this as a candidate for being a 4. It has this deep correction, which is rather severe, but it fails to break that low high point there. So this low is greater than high, so that qualifies for a 4. So I've got that as a 3 and a 4. Okay. Now the reason why we've got 2 types of corrections here. From this point 3 here, we've got an A, B, C down, or is it an A, B, the red A, the red B, and the red C? So that means it's got more to go down. Now this stock is important for those folks in America. Obviously, if you own Australian metal stocks, you get the benefit of a rising stock so a rising stock because gold or silver is going up, and you get the benefit of a rising currency because the US dollars is going down. So you get 2% returns, you might say. So I believe this severe correction here is more than enough to cater for this long rally here. So I believe the correction is small a, small b, small c, rather than the capital red B, capital red, capital B, capital red A, capital B, red C, whatever. Sorry, I'll get that right again. Rather than the A, B, C on the red capitals. That's better, isn't it? Right, so I believe we've got a wave 1 here, an impulse wave here. Good, strong volume. Pretty good volume. The volume has died off here. And we get it settling up with a wave 2 here, so it's still pretty bullish. Now, it would be cruel to have that all come all the way down here again to show that this correction here is a correction of the bigger trend. So it's one to watch. It still can go a bit lower, but I believe we're getting something like that. So, just to recap, I believe out of all the charts I've shown you, HMI is probably the strongest on the Elliot wave count and the volume structure, and Wyckoff cause and effect. HL shows some incredible strong strength up here. Look at that ripping up there. That's very good, but obviously got too far, and it's come back just above that price line there. If I draw just above that, it'd be great if it can hold that. That's strength, but really only has to hold this point here. Okay. So yeah, it's a good chart. A little bit more punishing on psychology. And obviously the Australian stock here is holding up very well. But obviously this works out well. You've got the currency gain as well as the stock gain. If the US dollar and the gold, US dollar falls and the gold goes up. So what does it tell us about timing? HMI suggests to us that things are getting close. I mean, I'm looking. This is a monthly chart, so we're looking at, you know, in the next 3 to 6 months, something could get very interesting, which suggests between now and December, the Fed's going to suggest that maybe the economy is not going so great in the second quarter or after the midterms, and subject to another massive stimulus by Trump, they'll have to start taking it easy on raising interest rates. So they're expecting a certain number of interest rate hikes in 2019, and maybe they won't do that because things are slowing down. Because we do know 2019 is a sugar high year, a lot of stimulus from the tax cuts. But with the rising interest rates, it's been taking out the US economy, and obviously with the trade wars and what have you, it just slows things down. So, sugar high for 2018. The boom sort of tapers off in 2019. Maybe a change in interest rate policy, or something sparks off in gold and silver, and obviously gold and silver can go higher while the dollar's going higher, the stick's going up, so the combination's all there. This video was about determining Elliott wave on monthly charts to show price and volume patterns supporting the Elliott wave. Thanks for watching.